was here. It was on this down move into this liquidity at 800. We went from 800 to a high price of 830. That was a $600 profit. And the second dispersion we had running into this, so it was difficult because we don't have any natural level of liquidity to trade into here. So we've got to be mindful of the fact we don't have any natural liquidity, but we do have that strong dispersion buy opportunity. So obviously you might wait for it to develop and then snap up some buys at 786s, 787s. Well, 786s, 787s traded back to that same high swing where we got out. So we got all the way back to that same high swing where we got out the last time, and that was about 820s. So that's another $600. So 2 trades so far has done $1,200 profit on 2 swings, guys. 2 trades, $1,200 in profit, possibly more on 2 swings. Now, you might have scratched out here for a +1. You made $100 anyway, so you would have been able to make money there. Scratched out. You could have said, well, I lost my value in that trade, so I booked it there. That's okay. That would be reasonable. But obviously, it would still give you the chance that you might want to add back in again and take another shot at it. So if they were there the last time, they might be there again. If the value is still there, the value is still divergent into the bottom edge. So take another shot at it. So maybe you got 790s and it traded a high price of 830s for $800. Maybe. You know, it is what it is. It's whatever you decide to trade. But there's only been 2, and they've both done their $100 target price anyway. So that's a nice start to the dispersion bidders, and we've had a good steady start, I think, from that process. Obviously, the sell side value that came in obviously gave you more of a challenge here, because you would obviously have been looking at that thinking this was a manipulation lower here. And you'd have been mindful of the fact that they manipulated lower, trying to maybe get that 800 wholesale. So you'd have been mindful of that as a storyline as they manipulated the price lower against that buy side value that we had in the background. So that turned out to be a really nice entry. This one was a little bit more challenging because we've now got the liquidity out the way, but the value is now a little bit negative. So you had to wait for the divergence to come in, get the divergence on the value there, hit the sell trade there, hit the buy trade there, hit into that trade, and run it, and a nice profit, at least a reasonable profit. 70.88s to a high price of 810s. It's a $400 winner on the first swing higher, and if that's $400, that's all you want, that's all you take, and that's exactly what you're looking for from a trade idea, isn't it? Exactly what you want from a process. 2 trades, 2 winners. Classroom at 10, guys. Classroom at 10. You remember Mr. Motivator, Melvin? He was a cracker, that guy, wasn't he? Did they not have some mad lycra outfit, or is that the green? Remember the Green Goddess? You'll probably remember, if you remember Mr. Motivator, you might remember the Green Goddess. She had this green lycra outfit on in the UK. She was always on morning breakfast television, motivating everybody to get fit.